is Antony Whitaker. Welcome to all my friends at the Australian Hairdressing Council. So, how do you value a salon? Well, you know, there's not a formula that is guaranteed to be right. It's guaranteed to make everybody happy. Basically, whoever's selling a salon is always going to think it's worth more than what it is, and whoever's buying a salon is always going to want to get a bargain. And buying an existing salon is fraught with challenges. So I've got a list of 4 or 5 things here, which I sort of use as a guide. So basically, it's a starting point, I suppose. And, you know, depending on who you talk to and in different countries, they tend to say that it's a multiple of the profit is a good starting point. And depending on where you talk about it, people will say it's 2 or 3 or even 4 times the profit. My experience in Australia, they tend to think it's worth more like 4 times the annual profit, but that's Australia for you. So I usually go with 2 times the profit, but I'm not going to, tell anyone to charge less. You can always come down in price, but you can't put it up in price. So if you want to go with 4 times, that's fine. Go with 4 times. So where do you get that figure from? Well, one of the things that often comes up is that somebody says to me, look, the guy or the girl selling it to me, they've shown me their profit and loss, and it says that they're not making very much profit, if any profit at all. But then they say to me, the reason why they're asking for the price that they're asking is because, you know, they take money out of the business. If you get my drift, they take black money out of the business without declaring it to the taxman in order to show a very small profit or no profit at all. But then when they're trying to sell the business, they want to factor back in this money they're taking out. Well, if you buy a business based on that scenario, I think you're crazy. So first rule for me is you want to get not just 1 annual profit and loss, you want to get 2 or 3 profit and losses from their accountant. If they're not prepared to give them to you, then I wouldn't even, entertain the conversation. But if you've got 2 or 3 profit and losses, in other words, you're seeing 2 or 3 years worth of transactions. If they just show you 1 year, they may very well have been planning to sell it for the last 12 months. And so they're cutting back on every expense possible to show a bigger profit figure to it. So if you get 2 or 3 years, then, they're not going to be able to survive if they get cut back consistently for 2 or 3 years and then try and, tell you that it's just really profitable business consistently. So multiple of profit is the first thing, as per their profit and loss report, as per something that comes from a certified accountant. But does it stop there? No, it doesn't. So that's sort of a start point for negotiations. But there are other things that you need to take into consideration. First one is that you would usually have some factor in for, in no particular order, actually. You'd usually factor in fixtures and fittings. Are fixtures and fittings worth anything? Sometimes. So if you've just spent, $100,000 or something, 200,000, whatever it's going to be, on a salon refit, you've got new chairs, new reception desk, maybe put new lighting in, that sort of stuff, and it's new, then that's worth something. And so, they might go 2 times, profit. And then the reason why they're asking for even more than that is that they're saying, and there's, £50,000 or dollars, worth of chairs that are, less than 12 months old. And so that might be a consideration. However, there's no point in talking about fixtures and fittings if they're 4 or 5 years old, because basically, 5 years, that's going to be the sort of shelf life of a lot of stuff. And it's pretty much worth nothing once it's 5 years old. Okay. So fixtures and fittings, maybe, depending on how old they are. Second one that you want to take into account is length of the lease. So if they've only got 6 months left on the lease, then whatever they're asking for their business is just, fairy tale stuff, because you could buy a business, and if there's only 6 months left and you may not get the business renewed, then it's worth nothing. So you'd want to make sure that there's a good lease there. At least I would imagine 3 or 4 years, at least. You wouldn't want to, take the business on with any less than that, unless it was at a rock bottom price. The next thing is the stock at valuation. So, if today was the day of exchanging contracts, the day of you taking over, you'd do a stock count and work out a price for that. It might add another 20 grand or something, on the price at the day of exchange to stop you running everything down so that you can get every penny for the business possible. That's a fairer way to do it, to keep the business intact and to probably, stop the staff thinking that there's something going on. So it's 2 times profit, stock at valuation, fixtures and fittings, time on the lease. All those things are things that you might factor in. And then the big one, And the big one is this mystery goodwill. And that's where you want to be really careful. What is goodwill? You know, goodwill is this expectation that everyone's going to stay, that all the staff are going to stay, that all the clients are going to stay, and that this is going to make all this money, as soon as the owner walks out the door. Well, can I suggest to you that probably exactly the opposite is going to happen? Probably if you're buying an existing salon, then the person who is selling it probably hasn't told their staff, and they will probably find out at the last minute. So typically what happens is the staff feel let down. They feel disappointed. Perhaps they feel, cheated and disillusioned, and that they have been walked out on. So often what happens in that scenario is, they end up feeling that, okay, time for a change. So if you buy an existing business, you don't know if it's still going to be there next week or next month. So this so-called goodwill is it's a very difficult thing to price. So if you're the buyer, I would suggest that, you don't factor in too much of a goodwill issue there, because I've seen many occasions where someone buys a business, based on there being all this goodwill, and the staff leave, and the relationship that the clients have is not with you if you're the new purchaser, it's with the person who's been doing their hair. So the relationships with them, so if the staff leave, the clients are all going to leave with them, and then you can be stuck with this salon, which technically is worth now a lot less than what you paid for it. In my experience, most people that buy existing salons pay too much for them. So, buyer beware. What else have I put down there? So, watch out for the black money thing when they're trying to value it. Do not pay too much. Should the owner stay or should the owner go? Well, that's a bit of a double-edged sword. If the owner stays, that can be a really good thing sometimes, because then all of a sudden that probably means the staff are going to stay, and therefore the clients are going to stay, so the cash flow is going to be there. But it really depends on who the owner is, and do you get on with them? And face it, if you're an owner now and you sell your business, in a lot of cases, you're probably unemployable. I'm unemployable. I can't work for anybody else. I wouldn't want to. I wouldn't want someone else telling me how to do things now. And so, if you're in a situation where you sell a business, but the owner stays on, that can be good as a transition thing, but it can also be a nightmare, because often the owner, that's now the employee, sort of turns into a bit of a staff room terrorist, because they're undermining all the changes that you want to make. And inevitably, you're going to want to make changes. So, again, double-edged sword if you're buying with the owner staying on. Could work out, may not work out. So, think carefully about it. What else have I put down here? Probably the main thing you want to be aware of if you're buying an existing business is that you're buying a culture. And when you take over that business, when you take over that culture, it may not be the culture that you want. It may not be a culture that's working for you. It may not be a business that's making nearly the profit that the owner led you to believe. And so as a new owner, you're going to want to change that business. And those staff that are still there, they're probably not going to be too happy about the change. So they're going to be undermining and sabotaging a lot of the things that you do. So, just beware that you're buying into an existing culture and be very careful about that. I hope it's been helpful. I'm sort of, often dealing with people that are buying and selling, and it's difficult to wear two different hats as to advising the buyer or advising the seller. I've been both. So I've got a little bit of experience on both. So hopefully this has been helpful. If you want to find out more about what I do, then check me out at growmysalonbusiness.com, or follow me on Instagram and Facebook, again, at Grow My Salon Business. In the meantime, see you later.